The broadcast is now starting. All attendees are in listen-only mode.
Hi, welcome one and all to another webinar and a live event with us from Phillip Nova. Today we'll be talking about Greenback and why it's trending. And here to kick things off is our representative from ICE Exchange. He's none other than Ian C. To walk us through the key tenets of the ICE Futures Exchange, as well as the contracts that we will be covering today. Ian, if you're all set to go, I can hand the reins over to you. Ian, please. Yeah, that's the clicker right there.
Thank you. My very first time doing a hybrid event, broadcast going live, and as far as the audience here. My name is Ian C. I represent ICE Futures Singapore. I thought it would be a good opportunity, since we're talking about the US dollar, to share information about the ICE exchange itself, and also what do we have on the ICE exchange. So on your seats are some brochures that gives you an overview about ICE Futures Singapore with the products behind them. I'll move along. So I thought I will share what ICE group is for you, to give you understanding. So ICE group itself, there are three pillars. We're actually a very much data and technology company. We are listed on the New York Stock Exchange, which also is part of the ICE exchange as well. So ICE as a group has three pillars of business. One is a mortgage technology business, where we are transforming the US mortgages from analog to digital. So this is a very US-centric mortgage business. The second pillar of our business is the fixed income and data services. So ICE has a very big data business. So we not only sell our own exchange data, we also sell multi-exchanges. So all our competitors, we also sell those data and multi-asset, equities, fixed income, futures, commodities as well. And lastly, this is one of the pillars that I represent. So under the exchanges, so ICE operates 12 exchanges globally. Unlike some of our other competitors, like they only run in the US exchanges. So we are a family of exchanges. So I'm going to go through some of these exchanges. You will know some of the products of these exchanges, but you wouldn't know that it was from ICE, right, under the ICE group.
Does it work? No? No? Okay, let me flip that for you.
Just have one next slide. Thank you. So this is all the different family of ICE exchanges. Like I said, the New York Stock Exchange is actually an ICE exchange, right? It's under the ICE umbrella, ICE group. So under ICE Futures US, you'll be familiar with our benchmark products like coffee, sugar, cocoa, cotton. The US dollar index is also on ICE Futures US. I will touch on that a bit more. On ICE Futures Europe, the ICE Brent crude. So when you are trading crude, you'll be familiar with the Brent crude because it's the international benchmark for crude oil. We have ICE index also, which a lot of our emission futures are on it, and all the EU power contracts. So right now they're having a very busy time because of all the power issues. So a lot of the contracts are very active right now. We have also an exchange in Abu Dhabi that has the Melbourne crude. And for APAC in Asia, so ICE Futures Singapore is the representative exchange for ICE in APAC. So we have formed in 2015. The main selling points are we are tailored for the Asian trading hours. So look at Asian participants, and we offer our benchmark, global benchmark from all our other sisters exchange, the benchmarks. So our contracts are cash settled, mini contracts, and basically they're based on the successful ICE franchise or other exchange. Okay, so very quickly to give you an overview of what are the instruments or products that we have on ICE Futures Singapore. Under equity derivatives, we have a micro Asia Tech 30 index. We have a micro MSCI US and micro MSCI EU. That's on our equity derivatives franchise. We took, of course, the benchmark product from our ICE EU, the Brent crude oil. We created a mini version. So on the ICE Europe, it's 1,000 barrels. So on ICE Futures Singapore, it's the mini version, it's 100 barrels. And today's topic of interest is the US dollar index. There's a trademark there because that is exclusive to ICE. Only ICE can calculate and compute the index for the US dollar index. So that we have a regular size one in ICE Futures US. We have a mini size one, 1/5 the size on ICE Futures Singapore. Okay, and we also have the mini dollar Sing, mini dollar CNH. And we also have the Bitcoin futures contract if you're interested. It's a 1 Bitcoin in size. Okay, so these are our main products, like I said, the micro MSCI US, right? So those, it's very closely related to the E-mini S&P. So basically, it's like all the 600 large and middle-sized stocks that covers 85% of the US stock market. So this is an index that tracks that, the futures contract on it. We have an Asian tech, right now not so popular, right? But however, we have an Asian tech, so you have exposure to some of these companies, TSMC, right? Chip maker in Taiwan, Tencent, JD, Samsung, Alibaba, Sony. Definitely you want to look at this because it's on one single currency, US dollars. So we don't have Chinese stock. We have Chinese companies that are listed in Hong Kong. We have Taiwan. We have Korea. We have Japan. So this is an interesting one if you have exposure to tech. And of course, today's topic will be on the US dollar index. I'll let the speaker elaborate more. The dollar Brent, the Brent crude oil, that's, like I said, it's international benchmark. I want to touch a little bit on the difference, right, in terms of contract size. So the mini US dollar index, it's 1/5 the size, okay? The multiplier is 200 times whatever price the US dollar index is at. And we are actually at a 2-decade high. The speaker later will elaborate on that. We are at a 2-decade high for the US dollar index. It's actually 6 currencies, it's a basket of currencies, right? So $200, the notional value is about US 20,000. Of course, you don't put that down. The initial margin is about 300, almost 400 US dollars. Exchange fees are 0.08% US cents, so very minimal. The price fluctuation is 0.005. That means every 0.005 movement is $1 US. Again, this is concentrating on Asian time zone, right? And then you'll say, oh, why don't I trade the regular ones in the US? Yes, you can. But on ICE Futures Singapore, this is my key selling point. 3 things to walk away. We have 0 market data fees. Okay, no membership fees, 0 market data fees. Our contracts are mini and micro in size. Of course, when you're a smaller size, it's lower margin. They are cash settled. You don't have to worry about any delivery and so on. And they are actually settled on the parent index in the US or in the EU. So 3 things I leave you with. Zero market data, smaller size, and test settle in Asian hours. Thank you.
Thank you, Ian.
Thank you so much, Ian. All right, next up is our speaker of the day, is Priyanka. She's our market analyst with Phillip Nova, and she's going to be walking us through Greenback, backing green and trending.
Hello and a very good evening. I am Priyanka Sachdeva. I work as a market analyst with Phillip Nova. And I welcome you all on a very informative session on ICE Future US Dollar Index Futures. We have recently seen a surge in US dollar index. It has reached its 20 years high, just like what Ian just told us right now. I feel it's a perfect opportunity to look at the relevance of this contract and see what trading opportunities it provides us. Trust me, I have never met a dollar that I didn't like. It's fascinating. So I just hope the presentation today is equally fascinating to you and the dollar is equally fascinating to you. Today,
Oh, just point here.
Closer, I think.
No, you're pressing. Just press down.
Okay. So today I have here a box of information to share with all of you, including the history, the contract specifications, the relevance. I would also be sharing some trading strategies and technical and fundamental analysis to go along with it. But before we head on, there is a small disclaimer. Whatever information I'm going to share with you today is only for awareness purposes. It's not at all any kind of a tip or anything from ICE Futures or Phillip Nova in any sense. Okay, so without further ado, let me introduce you to ICE US Dollar Index Future. It's denoted by DXY. So what is it? It's basically a future contract listed on ICE exchange, which is a benchmark globally for US dollar value. It derives the underlying behind it is the spot dollar index. It's the world's most traded and well-recognized currency index. In a single transaction, you as a trader can track dollar movements relative to a basket of currencies. If you are a commercial trader, a portfolio manager, a business who has income exposures to other currencies other than USD, it is a reliable hedging instrument against risk of move in dollar. It's imperative for you to know what is the composition of dollar index, how we actually derive what's the value at the exchange. So basically, ICE US Dollar Index Futures pits Greenback against basket of 6 currencies, including Euro, Swiss franc, Japanese yen, Canadian dollar, British pound, and Swedish krona. A vital point to note here is the percentage of Euro, which is 57.6. It's actually, the contract started with 10 currencies, but in 1999, Euro replaced a few of the European currencies. So now the weightage is higher. So what does it actually mean? It just means that you expect big move in dollar index whenever there is a movement in Euro. So any fundamentals or any changes in monetary policy or anything that impacts Eurozone will actually lead to the fluctuations in dollar index. And that's exactly what's happening right now. Before I move ahead, let me tell you a little bit about the history as a trader. It's imperative to understand that historical charts give us some information that nobody else has. The index was established shortly after Bretton Agreements dissolved in 1973. The index started at a base value of 100. What does that mean? That means if the index value is 110 today, that means USD is appreciated 10% in respect to the basket of currencies in 1973. To explain why relevance is an important point here, I would like you to go through this historical chart on dollar index. This is since the beginning from 1973 till date. After the launch, the dollar index fell to levels of 80. And it's only in 1984 where the crisis of overvaluation of dollar came. That's why we see this acceleration. And it reached its lifetime high at 165. At that point, Plaza Accord was omitted, basically including United States with the intention to weaken the greenback. And it worked magnificently and thus we saw the fall. By 1987, dollar index was back to the levels of 80. It stayed there till 1998, at which point again it is very imperative to note that Fed started raising interest rates, just like today. And that led to Russian default. And when Russian default happened, the sentiments of investors were again in the favor of USD. And that is why we again see this rise, a recent high of 121. After a point of time, when USD is stronger, the trade deficits start weakening. And thus we see this fall and it bottoms out at 71. Again, in the financial crisis of 2008 that all financial markets experienced, and in the expectations of rise of hikes from Federal Reserve, USD again started reaching up and it was between the level of 90 to 100 till 2022. And what happened in 2022? Fed realized that inflation is soaring. And it stepped in, time boring stepped in, and it started raising rates again. So again, what you see is the soaring high dollar index. So history proves not one time, many times. Whenever Fed raised rates, US dollar index flowed high. Okay, so enough about what is dollar index. The main key point here is the dollar future that is available in ICE exchange. ICE exchange is a counterparty to each and every future contract that's trading on ICE exchange. Each contract is $1,000 into the index value. The quotation is 3 decimal points, and every 10 decimal points denote a $10 value. It expires quarterly. That means every quarter there is a new contract. And to trade it with Phillip Nova, you have to put up a margin of 2200 USD at the current rate. I'm just assuming the rate over 110. Okay, now how this works, how the trading works, how you calculate profit and loss. Just a very simple example. Say you have long 5 contracts December futures at 110. And the index goes half a point. Okay, though the recent escalation is much more above a 16%, but just for the simplicity of example, just half a point. So the profit to be calculated is 5 into 1000 into the difference of points gain. So that gives you $2,500. That means on a simple investment of $10,000 around dollars, you would have made $2,500 in just half a point. Imagine this magnitude when you have a raise of 10 points or a acceleration of 10 points. Okay, so I'm sure every one of you who's sitting here or signed up for a webinar has heard about the soaring USD. So why is it so relevant? Why there is a sudden stir in financial markets? Why everybody is talking about dollar index? Because it's a single benchmark to judge how the value of dollar is performing, USD. It's a medium to speculate for traders who want to hold long or short positions and change for the change in dollar value. Analysts like myself, we use dollar index to track correlations between inversely or positively related contracts and derive strategies out of it. It is used by hedgers. It could be a normal trader, a portfolio manager, a company who has income in other currencies to hedge their exposure of currency if they have exposure in other currencies. It is also a proxy for health of US economy. Now, a very important question. Was that enough to excite you to trade USD? Or no, that was just theory? Okay, so the two important points that you should note here are, first, the US dollar is world's reserve currency, which means not just traders, economies, business houses, multinational organizations take a position in US dollar index to hedge. Secondly, as fascinating as this is, 88% of the total forex trades that happen across the globe, which approximately values to about $3 trillion industry, has USD on one of its sides. It is fascinating, right? Okay. Okay, so now so far I have answered what and why. What is ICE dollar index? Why you should be trading it. But before we actually talk about strategies, it is important to know what are the factors that impact this contract you're going to trade. What are the economic changes? What are the policies that impact the fluctuations in this contract? So those factors, like any other commodity or any other financial asset, are supply and demand of US index dollar, US dollars, or any other currency that formulates the basket. Economic data, production numbers, inflation figures, central bank policies, everything impacts dollar movement. The geopolitical reason that we recently saw, one of its kind, one of the events that happened, Russia-Ukraine, it has sowed investor sentiments, right? It's like telling investors not to put into risky assets, and that's why this kind of events also affect dollar movement. Another important point here is deteriorating economic outlook in Europe and China. When 2 out of 3 world top economies are struggling with inflation, struggling post-pandemic because of curves in growth, at that point, inflation really wiped off any scope of growth. And that's why where comes the influx into safe havens. So when investors realize that it's risky to hold any position, they dump it. That's why you see a lot of stock markets going down. People are offloading risky assets and moving your money into dollar index. Why? Because it's sentimentally giving you a safe haven. So why DXY is soaring exactly? Isn't this the question we all crowd of? Why is it soaring? If I have to put it in a very simple word, it's because of Fed's recent monetary policies. Now, how that works is, Fed has raised interest over last 6 months to fight inflation, to curb monetary policy, to restrict the money movement, and is likely to continue raising rates in maybe next quarter to 2023. And the rest of the central banks in the globe, though they have followed this, though they are there, they are also increasing. But the magnitude and aggression that Fed has increased with is unmatched. That makes dollar-denominated assets much more lucrative as compared to any other asset. And that's why people demand dollar to invest into dollar-denominated assets. And how would you take exposure of dollar? By investing into dollar index. As simple as that. That's where the movement happening from all other assets to dollar index. It's not just raising rates, right? It's the investor perception. I'd like you to go through this Fed's dot plot. And in a very layman's language, I will explain it to everyone. The blue dots here represents the expectation of FOMC members after the meeting of 15th June, whereas the yellow dots explains the perception or the expectation of rate after the 21st September meeting. Earlier in the year beginning, it was assumed that rates will rise till 2023 and start decreasing later on. But after the meeting of 21st September, this view has changed. People are expected that the Fed will keep increasing the rates, and when the rates will keep on increasing, that means the dollar-denominated assets will be giving you better returns and will continue in 2023. So that means the investors are now expecting that we should dump out the risky assets and keep investing in dollar because that's what Fed will not stop even if there is recession. This will go on, and that's what right now supports the ascent in dollar index very much. Okay, moving on to probably the best part of my presentation and why a trader would attend it. This strategy. Now, future markets exist for two reasons: price discovery and hedging your risk. So, if you are a non-commercial trader, you have just a small portfolio, you would be interested in a speculating strategy or a currency pair where you can take your own position and just use the fluctuations to make money. Whereas if you are a commercial trader, you are a business owner, you have exposure to other currencies, you are a portfolio manager, you would want hedging strategies, or you want to study inversely related products to take cross positions and hedge your exposure. I will be taking you all on these strategies one by one. Let's talk about trend trading or speculation. Trend trading or speculation involves identifying a dominant trend, uptrend or downtrend. And thank God we have futures, so we can even short sell when it's a downtrend. How you identify it? An uptrend, which is denoted here by green line. Okay, this is a chart I took or I made specific data from 2016 to 2018. Why I selected this only because it gave me a uptrend and a downtrend to explain it to you. Okay, as a trader, an uptrend is marked by higher highs and higher lows, whereas a downtrend is indicated by lower highs and lower lows. Okay, so all you have to do as a trader is identify the long-term or short-term dominant trend, look for an entry point to take position long or short, wait for a target to be achieved, or when the trend reversal is indicated by an event. As simple as that. Go long, go short, make use of fluctuations just by investing in unit dollar. Hedging strategies. Almost 40% of the global financial transactions are settled in US dollar. Every multinational organization which is making profit in different currencies end up converting into US dollars. So in case you are short position of Euro USD, you want to cross hedge with a position of USD because you want to protect your US dollar exposure. So if USD increases, your short position will give you a profit and your hedge position will give you a loss. So eventually your portfolio is balanced. I'll explain it better with the use of an example. Say you have an exposure of euro, okay, about 100,000 euros. The exposure can be any kind. You hold a portfolio, you have a business income, you have inflow of euros, you've invested in euros directly or any which way. For simplicity of calculations, I use simple numbers, but just to make you understand that say you invested at the time when euro and USD were parity. Now, if the dollar will change and you eventually want a US dollar protection, say it has appreciated 2%, which means the euro dollar parity rate would go down to 0.90. Eventually, your dollar equivalent value from instead of $100,000 leaves only $98,000. Now, how you protect this loss? Using hedging strategies. Since you are long on euro, so your long on euro means you are short on USD. So to take a cross position, you have to buy a contract long on ICE dollar index future. I told you every contract is 1,000 into dollar value. So here you have to just take one contract if the dollar index is 100. Okay. So what happens here is, since you are long, the dollar index will go up to 102, and your hedge position will give you these $200 that you lost on your So that is how you hedge your portfolios. This can be done by anyone, literally anyone. If you see your currency weakening, your portfolio going down, your stocks going down, just buy a dollar index. It will protect you. Okay, the next strategy, which is very, very widely used when people trade currency pairs. Okay, I've taken this graph where I've plotted historic movement of dollar index with the currency pairs. Okay, so if you see this blue is US dollar index, right? And all the currency pairs have similar movements. So you can use these. So if you have exposure in any currency, literally any currency, or you want to make use, because you probably know that Japan's economy is weakening and the dollar will, the dollar will appreciate and yen will depreciate. So you can take a cross position in US dollar index and make money out of it. As simple as that. Moving ahead, there are some very interesting products called inversely related products. For example, I've taken this, which is a chart between DXY and Gold. The white portion here represents DXY and the blue is representation of Gold. It's an historic chart from 2017 to 2022. You can clearly see that it's an inverse relationship. Okay, so if you know the dollar is going down, or if you know the gold is going down, right? And you are holding gold, or you're probably having position, or you just want to make money out of it. What will you do? Buy dollar index. If this is going down, the other will go up. It's a trade-off between two safe havens. People move from gold to dollar index, from dollar index to gold. Okay, another correlation, inverse correlation, is between DXY and S&P 500. Or probably you can chart any stock market, it will be same. Again, if you see, they are exactly moving opposite, right? So in case you see that there is a drop in S&P, or you expect people are offloading stocks, what to do? Buy dollar index. Okay? As simple as that. Now you can hold a portfolio, you can just speculate also. They are inversely related products and they very much exist. But there's always a but. Money making is not that easy. So what you do, like I plotted the commodity prices and DXY. Initially, this was also an inversely related product. If you see history from 2000 till 2022, it's inversely related. But recently, in last 6 months, the shaded portion you see, they have changed their correlation to positive. Now, don't take any word of any analyst or blindly follow. It's a tip for investors to always analyze what fundamentals and other factors also impact the movements. Why this happened? Because of the Russia-Ukraine war. The supply was distorted and thus this rising commodity. Eventually, this will come back again negative. But then there could be times when, as an investor, you have to use your own discretion and not blindly follow any tips. Okay, and I hope everybody who is watching the webinar or is here wants to really know that, okay, dollar is soaring, we all know the theory, it's available on Google and everything, but what are your views? Is it still going to go up? Is it still the king? So a very simple answer, yes. According to me, US dollar still looks like an asset to hold. And I have a plan to prove it. Okay, so I plotted this graph, historic chart of DXY. And I have used a regression from the recent high of 121 and the bottom it made on 71. This regression at 78.6% shows a line which is 110.4. Now this is a resistance that already dollar is crossed. Okay, so I don't see anything in between 110 to 121 as a resistance. There is no. Okay, so it's definitely 121 is a reachable target for dollar. If you look at these parallel lines, I plotted between 2010, joining the lows and the highs. I was just telling you speculative trend. So this is the dominant upward trend. Now, the upper line here will act as a small resistance, a little resistance. It's not something very significant, but yes, it's a resistance line. And somewhere around 115, it has to be tested. Okay? So what gives this up? So basically, what I think is, this is, in fact, this was respected last week. It did went to 115 and then it did come back. But it doesn't mean a small dip is acceptable when you have a long-term view on it. So according to me, what I feel that US dollar index will consolidate it over 110, so 110 will act as a support level now. And this upward trending line will act as a little resistance. So people will short sell with the stop loss of 116. So if it crosses 116, it's definitely going way away to 121 on the upside. And on the downside, you have the levels of moving averages of 20, 50, and 100, which is 111, 109, and 107. I'm sorry, this is a little out of the show. These are the numbers. So at the downside, if it does start coming down, these are the levels that it will test. Okay. To sum up today's evening, if you really want in my view, though don't take my word for it, okay? I'm just an analyst. So safe haven inflows will continue in US dollar. Fed is going to keep raising rates, and thus the appeal of dollar because of the interest rate differentials in the whole economy is pumping in a lot of money in that. And since it's the month of October, which is supposedly historically the month where we expect wider fluctuations and volatility, is historically proven October is the most volatile month of the year. So that's why I would say US dollar will likely consolidate over 110 with a long-term uptrend. It can reach 121, and at the lower end it will first test 110.4, which is a very, very strong support. Now there is a debate everywhere you will see online. The strong dollar is not a problem. Why are people experiencing that it's a problem? It's someone else's problem. No, it's everyone's problem, including the US. A strong dollar eventually will cause trouble to developing economies because their trade deficits, without any of their fault, has risen up. They will be settled in US dollar, and when the value goes up, their notional value that they have to pay up as trade deficits goes up. It will negatively impact the dollar-dominated assets. They are becoming expensive. Inflation will keep on rising unless and until we have corrective steps. A movement of 16% in USD in 6 months. Can you believe it? Companies like Dell, Netflix, they're all struggling because they depend a lot on income from other currencies, and thus the cost of hedging has gone up for them. Every dollar, every foreign currency translates into less dollars. And the most basic, it hurts everyone's portfolio. If you are owning any asset, any product, anything which is denominated in other currency other than USD, it hurts your portfolio. To sum up my evening, I already shared with you what dollar trend is going to be, but there are other products that you need to watch out in case you're taking positions in dollar. It's going to badly impact those images as a safe haven. They are inversely related. If flows into one becomes prominent, the other one is down. So gold image of safe haven is at risk. Eventually, after some time when the rates have risen, it will be a problem for US exporters because their products are now not comparable. They will have problems sending out exports or selling to different markets. Eventually, even US will suffer because of this. deglobalization due to dollar rise. There are always tensions between West and Russia, West and China. European economy is going down, China's economy is going down, and what is soaring? Dollar. So it can lead to deglobalization where people start having lesser exports and imports because of the settlement issues. And Eurozone fears. Who doesn't know Eurozone fears? They don't have access to oil, energy, anything. Everything which is priced in USD is hurting them more. Winters is approaching, so their situation is going to get worse. But this doesn't stop us. Huh? Only person who will have benefit out of it is traders. We know it's going to be volatile, we know it's going to fluctuate, so we can use futures to make a lot of money. In my career of 17 years as a trader, I've learned one very funny thing about the market. When one person buys, another one sells, and both think they are correct. That's it all from my side. I hope you all enjoyed the session. And if you have any probing questions you want to ask me, please go ahead. Anything? Ian, you have anything to ask me?
No, actually, I have a slide. I don't know if we could go back to the one of my slides. The last.
Oh, okay. Try again?
Okay. So before I hand it back again, I missed this point. Something that for the audience who are here and people online, something free. You came and you sign up. So on what ICE have done is you can. This is our website, ICE Singapore website. This is a US dollar monthly report, complimentary. You subscribe every month. Of course, not ICE giving it a view. We have a vendor. They will share the view about US dollar index. So if you are keen to find out, what's happening with the US dollar, you can scan this. So every month you will be sent to your email. You can subscribe it. And lastly, this is a more with all the products that you see on your brochures. So you have the dollar index, the Brent, the Bitcoin. We have currencies, the Korean won, for example. So this is like a 6 or 8 pages monthly report. That you get to understand more about the market. So if you want to know a bit more, these are the few resources that you have free of charge. Just subscribe and then we send you an email. So online as well as the audience here live, handphones out, take the QR codes, and free to subscribe. That's something I wanted to share with you.
Jay, do we have any questions?
1 second.
Do you want me to go over any point one more time which is not clear, any strategy? So I think we'll be sharing these recording and
Yes, the
slides
video
on our website, so you can access them anytime you want. If you want to use the formulas that I used here on the website, you can just go online and take it from there.
All right, first question is, when will the US dollar drop?
Well, to be very honest, it's very difficult to predict what a contract is going to do. But as of now, I just shared my view that I still think that it's gonna still hold. But yes, there are levels. Once you reach 121, it will drop a little bit. Once inflation, the job market reports, I think so far the job market is unaffected in US, right? So it gives Fed floor to keep raising rates. So once that kind of impact will start coming in economies where your growth starts negating, when recession is more visible, when labor markets start complaining, then at that point of time, Fed will stop raising rates. Then Fed will start using different physical changes, in physical policy changes. At that time, the US dollar starts dropping. But if a technical view is required, I do share some resistance levels of 121, 115. So, but going forward, I think there will be a lot of buying on dips from investors that will be coming, and next quarter can be really, really good in fluctuations. So just don't wait for a trend reversal, okay? Just enter into it, buy in dips, have on turn around events, and make the best result.
All right, just a follow-up to that question. Right now, we have rising inflation. And
Yes.
interest rates are rising as well.
Yes.
This is a follow-up to what you shared earlier. So what's the strategy that the US is taking? And when will we see the end of this strategy and things normalize?
See, if you just ask my view, I think the November monthly meeting that's scheduled next month, I think they will again raise 75 basis points, right? And the dot plot that I shared you with raising rates till 2020, I think that's going to change again. So unless and until, and just imagine the inflation figures are pretty high, getting them back to 2% will take time. I'm sorry, but this is going to be slow, okay? So there is not going to be any other school meeting within 2 months that the Fed will start decreasing rate. No, that will take time. Its own sweet time, and we have to wait for some signals of economic weakening or labor market changes before we can actually start talking about a downtrend. Okay, so as of now, it's not. It's really soft landing or anything is a wishful thinking at this point of time, according to me. In fact, we should all be talking about how hard the landing would be.
Okay, we have another question online. I hear a lot about CBDCs coming in the very nearby future. Any idea on how it will transform the currency markets for trading?
Well, I can't analyze the inflow. The inflow is coming from everywhere because, like I just told you, that the riskier assets are going to be down, and obviously, when people will be dumping them, they will be putting that money somewhere else because that will go into safe havens. And currently, when we talk about safe haven, it's more of a dollar than gold, right? So I think that inflow will keep on going unless and until. But you know what? Certain Asian markets are currently resilient to uh, the downfalls that we are seeing in other assets and other downfalls. So I can bet on dollar and Asian markets as of now.
Well, when we talk about hard landing, what is the potential impact to market that the investors should take note of? Like, what are the things that will likely happen when there's a hard landing?
Yeah, I think none of the economies have come forward and accepted that recession is there, but we as individuals definitely feel it, right? Don't we? We feel it. So I don't want to be very bold and say that recession is the side effect. So let's just keep it muted under the lines that inflation is very high. We are all struggling to meet our ends. So that's it. I will not. I also have to use some safer modes of speaking when I am speaking, right? Online, right? So unless and until some of the economy comes forward and tell me that it's recession, we are hitting it, I'm also not saying it, okay?
All right, questions from the floor. Do you have questions for our analysts? Or what are you most concerned about right now with the US dollar or how markets are panning out? Or if you have questions on the ICE regular or mini contract, you can direct them to Ian as well. He's still available. members of the audience joining us through the webinar, you can still ask your questions through the question box in the webinar. We will address them during the session. If you have more questions, you can, and we can't address it, we will address them in our follow-up email. All right, just send your questions in right now. Audience, do you have any other questions? Based on what's happening out there, what are you most concerned about right now?
Did you got the answers you came looking here for? No? Then ask. Did you? Okay, good. That's interesting. Yes.
Yes.
Just know how the reflex the currency is very strong for quite some time because they've been in the market. So maybe next year we will do the inflation. So the US dollar drop, then in then
No. The contract is talking about is future, right? So when it starts, that's what I explained when I talked about speculating. You have to either wait for a target to be achieved or you have to wait for a trend reversal. Say if you go long now, just offload it at the point where you see it has taken a turn, right? There are levels, there are indicators. Global economies have, become out. People will start talking about it, so you know, things will happen. So you offload. Instead, you short sell it, right? It's a future. Why we only, as a trader, go on buying? Why only bullish? Bearish markets are equally good. Take a short position. Make use of that. Yeah, buy on dips. Buy on dips. Highs. Why only trade bullish markets? Bearish markets are equally good. In fact, my lifetime profit, I was a trader, just for the information, I was a trader for 17 years. And my lifetime high profit I made in 2008 financial crisis, when the markets dropped in one single day. That was the day when I made my lifetime high profit. I never crossed that benchmark even today. Anything else, Sri? Or should we just say sayonara?
All right. Thank you so much for attending the webinar. If you have further questions, you can direct it to Priyanka, Analyst, ENC, who will be still hanging around for a bit, or any of my colleagues out there. If you'd like to try a platform demo, just put in a request in the survey form at the end of the webinar if you are watching it home, or if you are right here, just approach any of our colleagues. All right. Thank you so much. Thanks for coming. Hey, hang on, just one last question, all right? Can we take it?
Okay.
All right. So, Jason, you're in luck. We are going to take your question. With US bonds and T-bills recent bailout by the buyers, will this affect the dollar index?
Actually, it's the other way around, to be very honest, because the yields on treasury bills and bonds are more lucrative. Currently, because of the rising rates, US is about 3.5 to 4% yield on bonds and treasury bills. So it's the other way around. Because the yields are higher, people are looking for dollars. They're buying dollars to invest in, dollar-denominated assets or bonds or treasury bills. So it's the other way around. So as long as Fed will keep on raising rate and these yields are better compared to what they are getting in other currencies, the money flow will move into dollars so that people can buy dollar and invest into bonds and yields. I hope that suffices answers. It's the other way around.
All right. Thank you so much, members of the audience. Thanks for being here. Hope you learned something today. If you have any questions, please just approach any one of us. The key is to learn and be ready for the opportunities. Thank you.